Welcome to County Portal, your simple source for local government services and public records. Let's get started.
Today, we're breaking down a crucial topic for anyone applying for or receiving HUD assistance. What exactly is considered an asset? Understanding this is vital because your assets directly affect your eligibility for programs like Section 8 or public housing, and they play a big role in how your portion of the rent is calculated. It's not just about the money in your bank account. HUD's definition is much broader, so let's get right into it. The most common assets are the ones you'd expect: cash you have on hand, and the balance in your checking and savings accounts. This category also includes things like CDs, or certificates of deposit, and money market accounts. Next, HUD looks at investments. This is a big category that includes stocks, bonds, mutual funds, and even retirement accounts like a 401k, an IRA, or a KEO plan. A lot of people get confused here, but even if you would have to pay a penalty to withdraw money from your retirement fund, HUD still counts its total cash value as an asset. Another major asset is real estate. This is any property you own other than the home you currently live in. So, if you own a vacant piece of land, a rental house, or a vacation cabin, the equity in that property is counted. Equity is just the fair market value of the property minus any money you still owe on it. Lump sum payments are also considered assets once you receive them. This includes things like an inheritance, lottery winnings, a capital gain from selling a property, or a large insurance settlement. Finally, certain personal property can be an asset if it's held as an investment, like a valuable coin collection or fine art. Now, it's just as important to know what is not an asset. HUD does not count necessary personal items like your furniture, clothing, or your car. The home you own and live in is also not counted against you. Furthermore, government benefits like food stamps or TANF are not assets, and neither are educational savings accounts like 529 plans. Here is the most important rule to understand: the asset threshold. If the total value of all your assets combined is below a certain limit, which is currently $50,000, HUD will only count the actual income those assets generate, like the few dollars of interest you might earn from a savings account. However, if your assets are worth more than that $50,000 limit, HUD calculates something called imputed income. They take the total value of your assets and multiply it by a national passbook savings rate to determine an income amount, and that amount is added to your other income to calculate your rent, even if your assets didn't actually earn that much. That's why accurately reporting all your assets is so important. I hope this clears up what HUD considers an asset. It can be a confusing topic, but knowing the rules helps you stay in compliance and understand your rent calculation. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel for more straightforward guides on housing assistance. See you in the next video.